Some stocks have been absolute channel favorites, and for good reason. They've delivered in a pretty big way. But it is time for a reality check. Do they still have what it takes, or, well, is the magic fading? Hold on to your seatbelts, folks. This is going to be a good one. There are some stocks that we've talked about it on this channel a lot. They've been long-time favorites, and, well, they haven't just talked the talk, they've walked the walk because they've delivered big time. So, one big adage in investing is that, and it's a very true adage, is that yesterday's returns do not guarantee, well, tomorrow's returns. Markets do change. Fundamentals, yeah, they do change too. Sometimes those once solid picks start to crack, and often that will happen when you're not paying attention. Today, well, we are going to be putting 5 of our most popular stocks under that microscope to see if they still have the fundamentals to keep their channel favorite titles. Could we be showing one or more of these stocks the door? Well, you're going to have to wait and find out. As a bonus, if you stick around to the end, we will throw in another stock for you. So you're getting 6 this time around. A sub to the channel is the best way to catch future bonus content. Normally we have a set of qualifiers to help us narrow down the list. However, this time I personally picked these stocks that have held a cult status at one time or another in the last few years. As usual, these stocks are sorted by their 1-year total return, and as I mentioned a moment ago, we do have that one bonus stock that's going to be at the end for you. It's technically not sorted by its total return because it's a bonus one. It's ranking against itself. So without any further ado, let's do this. We're going to start with, oh boy, Hammond Manufacturing Company. So HMM.A. Hammond, of course, specializes in electrical and electronic enclosures, power distribution equipment, racks and cabinets, and, of course, electronic transformers. Their products are widely used in industrial, automation, telecom, data centers, and, well, electrical infrastructure. So at the time of recording, their price was coming in at $10.43. They got a market cap of $115.04 million. Their beta, very non-volatile, 0.36. Earnings per share coming in at 1.65. They've got a price to earnings ratio of 6.15. Looking at the return on equity, that's coming in at 16.38%. Return on assets coming in at 8.40%. And their debt to equity ratio coming in at 44.66%. That's not too shabby. Okay, looking at their dividend, they do have a smaller yield, 0.59%. And this is a semi-annual dividend of 3 cents per share. Payout ratio, very manageable, 3.64%. All right, let's get to their returns. On their 3-year return on investment, that's coming in at 182.66%. Factor in those little dividends, we get a total return of 187.53%. On that 1 year, the return on investment, it's not as impressive, 4.30%. Total return after we add in those dividends, 4.90%. Now, they did experience a fairly deep correction at the beginning of the year, but they have bounced back well since then. So don't let this lower return on the 1 year fool you into underestimating this company's potential because, like I said, it is one of my favorites. Their 3-year annualized, looking good, 42.20%. Big question I always get, are you still bullish on Hammond? And yes, I am. I am still very bullish on Hammond. And the reason, well, it's very, very simple. The push towards data center expansion, 5G networks, and renewable energy grids drives a lot of long-term demand for racks, cabinets, and power distribution gear. This is perfect for Hammond. And it is going to keep them in my good books probably for some amount of time to come for sure. Okay, number 5 was Epic. Everybody knows Hammond. I talk about them a lot. But who could be number 4? Well, you don't have to wait any longer. It's Bird Construction, so ticker BDT. Bird, of course, is one of Canada's leading general contractors involved in commercial, institutional, industrial, and civil construction projects. They also handle industrial maintenance and operation services, plus public private partnerships. They have done well and positioned themselves in a very, very good spot for sure. Looking at their price at the time of recording, that's coming in at $30.14, and they have a market cap of 1.64 billion. They are exactly as volatile as the market average with a beta of 1.00. Their earnings per share coming in at 1.82, and they have a price to earnings ratio of 16.29. That return on equity, 26.31%. Return on assets, 5.72%. Their debt to equity ratio coming in at 68.16%. All right, let's take a look at their dividend. They have a yield of 2.83%, monthly dividend of 7 cents per share, payout ratio on that, 37.19%. All right, let's get to these returns. Their 3-year return on investment, 331.19%. Factor in the dividends, total return, 354.59%. That's not too shabby. On their 1 year, that return on investment, 21.58%. Adding in the dividends, we do get a total return of 24.69%. And their 3-year annualized, looking nice, 65.66%. Bird Construction, they're deeply tied to Canada's infrastructure build-out, government construction spending, and private sector capital projects. When the government says build, 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 Bird Construction very well could be doing a lot of that building. All right. As you know, there are more than one Hammond company, and the second Hammond company made it in our list at number 3. So we got Hammond Power Solutions, HPS.A. Now, this version of Hammond, they're a leading manufacturer of dry-type transformers, including custom electrical transformers, reactors, and power quality products. Their products are used in electric utilities, renewable energy projects, data centers, heavy industry, and commercial facilities across North America and globally. They've actually got a pretty big footprint developing in India. Looking at their price at the time of recording, $128.71. They got a market cap of 1.42 billion. That beta coming in at 1.18, and they have an earnings per share of 7.54. Their price to earnings ratio, 15.78, and they have a return on equity of 31.67%. I love that number. Their return on assets, 16.90%. Now, their debt to equity ratio is a nice low one, too. I'm loving this, 14.94%. Looking at their dividend, a little bit higher than the other Hammond company. Their yield's coming in at 0.92%, and it is a quarterly dividend of 27.5 cents per share. Payout ratio on that, 14.59%. Looking at their 3-year return on investment, 822.65%. Factor in the dividends, total return, 838.96%. Holy banana bread, that's kind of crazy. On their 1-year return on investment, coming in at 27.88%. Total return after we add in the dividends, 28.97%. Their 3-year annualized, 110.97%. Like Hammond Manufacturing, they are poised to do extremely well for the same demand as we push more into telecom, 5G, and data center infrastructure. They're still in a position where they have more customers than they can handle. And that's a very good place to be. Okay, who could be sitting at number 2? Well, Diversified Royalty Company. So one of my favorite little guilty pleasures, DIV, their ticker. They are a royalty company, so they buy royalty streams from stable cash flowing businesses. Then of course, they collect regular royalties from those businesses. They've owned some pretty big royalties like Mr. Lube, Sutton Real Estate, Air Miles, and many, many more in Canada. They also just recently added a U.S. toasted sub maker Cheba Hut to the mix. So that's another stream of income for them. Their current price at the time of recording, coming in at $3.32. They've got a market cap of $560.03 million. Their beta sitting at 1.08. Those earnings per share coming in at 0.16, and they have a price to earnings ratio of 20.69. Their return on equity, 9.38%. Return on assets, 6.44%. And their debt to equity ratio sitting at 89.16%. They're not perfect fundamentals, but I've been following these guys for a long time, and they've never let me down. They've got a wonderful yield of 8.31%. That's a monthly dividend of 2.3 cents per share. That dividend actually just went up. Their payout ratio coming in at 92.0%. Now, I am using the cash flow payout ratio for this one. Their 3-year return on investment, not too bad, 27.69%. Add in the dividends, and they're good dividends, 55.27% total return. On their 1 year, that return on investment, 22.51%. Adding in the dividends, total return, 31.88%. And their 3-year annualized coming in at 15.80%. So I do love royalties, and this has been a long-term favorite for sure. Their latest addition to the basket of royalties certainly went a long way to keep them on today's list. All right, who's our top stock? And keep in mind, we also have a bonus stock coming after this one. But at number 1, it can only be Lundin Gold. They are a mid-tier gold producer, and they're operating a huge mine in Ecuador, which, well, that mine has been delivering big time while gold itself has been surging. So we kind of got a perfect storm for profits for sure. At the time of recording, their price was coming in at $70.08. They've got a market cap of $16.91 billion. Beta coming in at 0.86. So their earnings per share coming in at 3.04, and they have a price to earnings ratio of 23.09. That return on equity of 47.31%, and the return on assets 29.78%. And here's the best part. Their debt to equity ratio 0%. They got no debt. I love this. I love this company for sure. Looking at their dividend, they have a yield of 2.47%. It's a quarterly dividend of 61.9 cents per share. Payout ratio on that, 36.04%. Now, I do have to add, in June, they paid out extra dividends as they're passing on some of their record profits back to the shareholders. I would not be surprised to see more special dividends in the future. All right, looking at their returns, their 3-year return on investment, 798.46%. Factor in the dividends, total return 842.37%. That's absolutely not too shabby. Love it, love it. On their 1-year return on investment, very impressive as well, 204.43%. Adding in those dividends, we get a total return of 213.87%. 3-year annualized sitting at 111.22%. The Fruta del Norte is a world-class gold mine with robust production, low costs, and high grades, which gives Lundin excellent cash margins, even if we were to see weaker gold price environments. Lundin Gold is also turning into a favorite of many institutional investors who love those single asset plays that have exceptional geology. So these are our big hitters for sure. However, I did promise a bonus stock, and when it comes to community favorites, there is one stock we have to mention. Canoe EIT Income Fund. It goes without saying, they have to be on the list. Ticker EIT.UN. So good old Canoe, it's one of Canada's largest closed-end equity income funds. They hold a diversified portfolio of primarily Canadian and U.S. stocks, tilted towards blue-chip dividend-paying companies, primarily in, energy, healthcare, and financials. Those are their big 3 hitters. At the time of recording, their price was coming in at $15.64, and they got a market cap of $2.82 billion. Their beta coming in at 0.85, and they have earnings per share of 2.30. That price to earnings ratio sitting at 6.80. Their return on equity, 24.90%, and their return on assets, 14.36%. Looking at their debt to equity ratio, pretty darn small, 9.63%. All right, let's take a look at those dividends. They have a yield of 7.67%. Quarterly dividend, it's still 10 cents a share. It's been that way for a long time. Payout ratio on that, 52.17%. Looking at their returns, on their 3-year return on investment, that is coming in at 28.41%. Factor in the dividends, we get a total return of 57.96%. On their 1-year, that return on investment, 13.09%. Add in the dividends, we get a total return of 21.76%. Their 3-year annualized, 16.46%. Canoe is a very well managed fund, and they have been absolutely brilliant with their adjustments to combat market changes. This will bode well for the fund as we navigate the potential hurdles ahead, and they will continue more than likely as a staple in many income or dividend growth portfolios. If you are interested in any of these stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on HHIS, and I will see you in the next video.